And great to see you as always. Thanks so much for joining us. What did you make of the market today?
Righty, look, I certainly agree with Michael. A very positive performance today, and certainly a number of factors are really adding to that today. Obviously, those leads that came through this morning, we saw some positive commentary from the Fed. Of course, we saw oil prices rebounding. We saw strength across the region, and also that Aussie dollar, which is still sitting at 4.5-year lows. I think all of those are really adding to the positive momentum on the market today. We saw that energy sector, the best performer, not surprisingly, up 3.3% in the end. Obviously, over in the US, we saw that energy index up about 4.2%, and obviously a bounce in those oil prices. And following on from that, I think it's having positive ramifications in terms of that materials sector. We did see some lower commodities overnight. Iron ore was down about 0.8%, the lowest we have seen since about June 2009. But nonetheless, we did see strength in that materials sector. And of course, that financial sector was holding up strongly today, again, following that positive commentary from the Fed, but also in the wake of AGMs that we did have out from ANZ and NAB. It was fairly quiet in terms of local economic data today, so it certainly was a lot of that strength around the region that we were taking direction from, and of course that energy, materials and financial sector. Obviously volumes were also very strong today, but given that it was options expiry, potentially can't read into that too much, but as you did say, a very positive performance continuing that momentum.
What did you make of the banks? I mean, particularly in light too of the Murray inquiry, the recommendations there for higher capital ratios. We don't know how much, when or if. So there's still a lot of uncertainty out there, isn't there?
That's exactly right, Bridie. There certainly is, and I think a lot of the focus today was around some of those recommendations that are, or the potential impact from those recommendations from that inquiry report. ANZ absolutely had a stellar performance, up 1.7% in the end, but obviously assuring shareholders that they do still remain in a very strong position and will be able to handle any of those recommendations that do come through. They've obviously been actively managing their capital position in anticipation of a potential call for the banks to hold more capital. They have said that over the last quarter they have generated about $3 billion in organic capital, and that common equity tier 1 ratio has now increased to 8.8%. So that was very comforting, I think, for investors, and that's certainly why we did see a strong performance in that share price, despite saying that they are experiencing challenging conditions in FY15. And of course, looking at NAB as well, another one that outperformed the other majors. Also looking at commentary in that area, we do believe that NAB will be very resilient in terms of their capital should they have to deal with any of those recommendations. But of course, one of the other focus points that we were looking for within NAB was in terms of that UK exit strategy. They did say they are continuing to look at a number of ways in terms of exiting those troubled assets, and that certainly remains a positive in our mind. We know that recently they've obviously been selling off those troubled commercial real estate loans. So very positive. We very much like NAB in terms of their turnaround story, in terms of exiting that UK business. They have underperformed a lot of the majors since the start of the year. So I think the fact that they can continue exiting that UK business, I think, will be a positive, and we will continue to see that share price performing strongly.
Leanne, what was your thoughts on the downgrade from Flight Centre?
Righty, look, it certainly was disappointing. I do think it was quite a brutal hit, though, to that share price, seeing it down close to 10%, as you say. Potentially at these levels, it could be looking like good buying opportunities, but as Michael said, we potentially could see it under a little bit of pressure. But I do think maybe it was a little bit overdone today. Obviously expecting those net profits now to be up to 4% below the previous year. But it was interesting saying that obviously the downgrade has been driven by weaker consumer sentiment post the budget, but since the budget we have been slowly seeing that consumer sentiment improving. So I do agree that a lot of those lagging effects will probably come into play. We are of the expectation that the more we start to see that consumer sentiment improving, we remain fairly confident that their domestic corporate travel will continue to improve as well. Obviously this stock has been a bit of a market darling of late, but obviously since the budget they have come under a bit of pressure. The stock is down about 40% or so. So as I say, potentially could could look like good buying opportunities at the moment. We still do remain very positive in terms of the outlook for this stock. It has obviously been a leader in its segment, and it does still have some pretty strong free cash flow generating capacity, and also some pretty strong return on equities as well. So certainly like the outlook. Very disappointing getting this downgrade today, but as I said, a very brutal hit to that share price potentially has been a bit overdone, I think.
Leanne, what do you think of the outlook for Graincorp?
Bridie, I think it does remain certainly quite concerning, particularly given that commentary today. As you say, they have been under a fair bit of pressure as a result of that intense competition, persistent drought conditions as well, and of course those lower grain volumes, which really have been affecting a lot of their earnings. And obviously seeing that commentary today, I do think the outlook certainly will remain very challenging, and we do remain a little bit concerned. They did actually come out saying that they do remain focused on some of those strategic initiatives that were previously announced, and they also remain focused in terms of their capital management initiatives. So they do want to remain focused on being a reliant dividend payer and also having some flexibility within that balance sheet. So potentially a reason why we did see some strength in that share price today, despite seeing those challenging outlook comments coming from the AGM. So look, I certainly think the outlook does remain concerning. I do think that that competition is going to continue having a negative impact on their pricing, their volumes and their overall performance, and they are actually starting to reach the peak of their FY15 capex program, so I think their cash flows going forward are potentially looking a bit weaker as well. So I certainly agree with that commentary. I think the outlook does certainly look very subdued, and it was quite interesting that we did see a positive share price performance today.